In today's video, I'm talking about two really interesting trade setups going into next week. Stay tuned, let's take a look. What's up, you guys? Welcome back to the channel. My name is Nick. I talk all about trading and investing. I try and keep it real, and we're talking about two setups today that you should probably at least entertain and look at with me here on the chart. We're talking about the first pair, which is pound dollar. A lot of you guys have been looking at the pound dollar. It's a very, very hot topic currency pair right now because it's been falling and falling and falling. And in today's video, I want to talk about a setup and my thoughts for the pound dollar going into next week. And then we'll take a look at one more currency pair if you stick around. So take a look here. Pound dollar, downward pressure here on this pair. Looking at the 4-hour chart, you can see we pretty much fell out of favor for the bulls. Like, the bulls were just in control of this market. We had a huge upward trend going well. Bank of England, hawkish, all that sort of stuff. And then we just had the breakdown to the downside right here, where we got a big fat breakout and continuation. Not only that, we've seen impulsive moves followed by corrective moves, impulsive moves, corrective moves, impulsive moves. And now the question is, are we entering into another corrective move? So I want to talk about this with you guys in terms of the 1-hour chart. And this is a little bit lower time frame, but it is Friday when I'm recording this. So this is something that may be something to pick up and look at next week, or maybe towards the end of today. We'll keep tabs on it and see what happens. But check it out. I want to draw a fib with you guys. If I draw from the swing high to the swing low, and then let's see what our levels have to say. I wanted to show you something. So we are kind of rejecting currently at the time of filming this, the 38.2% retracement, but the level that is more interesting to me is actually, if we zoom out a little bit, the 50% and the 61.8% as possible short setups. Again, we got a big pop here to the upside here today, so I do think that it's possible that maybe we see a little bit more of a pullback here, depending on what the dollar does. But right now, the dollar has been strong all week, and so I'm still looking to be dollar positive, looking for shorts on this pair and the other pair that we're going to look at. But mostly the idea being, okay, well, we've got structure here, right? If we look left, we've got structure that could act as a supply zone at the 50% retracement. If price does poke its head up there, if not today, maybe going into next week, I would say that's a reasonable area to look at some potential shorts. Now, please remember, this is not financial advice. I'm not telling you to go take these trades and to go all in or anything like that. No, I'm telling you, please do your own homework, do your due diligence before you place any positions. But I am talking about the pound dollar from a perspective of, I'm short biased on this pair overall, with the idea being, dollar positive for the time being with risk off sentiment in full swing. We're seeing the stock market under heavy pressure, and we would probably expect that the pound dollar would also kind of follow suit with that, as it is that higher risk currency. So perhaps we get a little bit more of a pullback here going into the end of today and maybe into next week, where maybe if we get up to that 50% retracement, there's ideas like shorting at levels like 1.3440, things like that, right? At that structure level, you've got beautiful structure looking left, as well as that fib retracement, and again, a strong downward trend on the 4-hour and 1-hour chart, right? So I kind of like that going into next week. I thought that that might be an idea to look out for, especially with the US dollar doing so strong right now, and already finding some support here as we bounce off of today's kind of low, finding what seems to be a low for now. So maybe we'll have to revisit this trade next week, but EURUSD is the next one, and this one I wanted to look at a little bit higher time frame. Take a look at the 4-hour chart with me, and notice we've had a huge break to the downside. EURUSD slipping and sliding and falling down the hill here.
Help! I'm slipping!
The thing here is that when you look at the euro dollar and it's slipping like this, it wants to continue, in my opinion. Most likely it wants to keep moving lower, especially when you kind of compare the two currencies involved. You have the euro area versus the US, right? And right now, in terms of monetary policy, one stands out aggressively compared to the other. The euro, in my opinion, not so attractive, kind of lagging in their monetary policy and rebound, whereas the US, high GDP figures, strong unemployment, and the Fed is taking a strong stance against inflation. You put those two things together, the US dollar, in my opinion, is more attractive and means that I am more willing to short this currency pair, right? Favoring the dollar over the euro. So I'm saying shorting the dollar, buying the dollar, shorting the euro, buying the dollar is the more attractive stance in my opinion. Now, if we take a look at this, I don't want to just short it just because I'm bearish on this pair. I want to look for technically sound levels where we can take risk management into account, use price action, use our technicals to combine it with that fundamental analysis that we're doing. So I like the idea of a pullback to something like the 38.2%, which also happens to line up nicely with some structure that we have seen recently back in December, right? So December 17th, December 15th, December 7th, and November 30th, we had strong rallies off of this level. And then when we broke through, we had nothing but bleeding out on the euro dollar. So a retest of that area, in my opinion, looks like a possible short setup going into maybe next week. Now, of course, we may never get this. We may see the market drop like crazy before we get these entries. And that's just sometimes going to happen, right? The idea here is we are talking about setups that we could look at if they start to come into play, not necessarily, like, oh, short the euro right now, short the pound right now. We're looking at this from a technical standpoint. We're saying, where's the best opportunity for risk to reward? And in my opinion, you look at this, the idea being keeping that stop relatively tight. There's some good risk to reward up there at that 38.2%, just riding with the trend, at least in my opinion, right? So, looking at something like that, looking for continuation, I'm basically looking to fade any pops on the euro that I can going into the next few weeks. Until further notice, that's kind of my main look. Now we'll do one more bonus one. We'll take a look at gold here, which is dropping off a cliff, right? The thing about gold, I don't have any super strong signals per se, because right now this thing seems quite extended to the downside, but you probably wouldn't catch me buying it. And the reason I won't buy it, even though we're kind of sitting at a level of support, the reason I wouldn't be buying it is because right now, with the Fed coming out this week with such strong bullish catalyst news, I'm kind of sticking with the play here of going with the flow, not betting against the Fed right now, right? And we saw this big breakout, right? Ever since we saw that break, what we pointed out earlier this week in the video that I did on gold, talked about this level as a potential retest. We actually tagged that level and dropped immediately. I never got a trade on there, but you can see it happened so fast. It popped up and then dropped like a rock. So going into next week, that same level, if we do decide to retest that, could be interesting. But also, if we get a breakout of structure here at 1790, which we're kind of seeing playing out right now, we'll have to see how this candle closes today. You may see opportunities next week like a dip, a continuation off of that, right? And maybe gold just continues to fall off the screen. A couple levels on the higher time frames that we could see gold heading down to are, of course, 1760. We'll mark this as a potential short-term target. So let's see if we can go horizontal ray. We'll put it right there. And yeah, 1760, we marked this the other day as well. Could be a short-term outlook for where gold could go here on the 4-hour chart. So pullbacks, or breakout and retests are both ideas, in my opinion, where we could see gold continue to kind of fall down here. We're seeing the towers tumble a little bit when we look at gold. And I think it's probably for good reason. With the Fed being so strong on inflation right now, or at least their stance seems to be, inflation, remember that a strong inflation rise is usually good for gold, but lowering inflation and lowering inflation fears tend to be bearish for gold, right? Which is the current outlook that we see. We see markets kind of factoring in that inflation, yes, it is a big problem, but the Fed seems to be taking a stance on it, and it's causing things like our last bonus market, the stock market, to drop, right? The stock market is dropping really, really hard, and it's just every single rally, you guys, it seems like it just gets sold into, right? Every single green bit is met with a whole bunch of red. And again, this is probably mostly in part due to the Fed's stance on inflation. They're talking about rate hikes, which the market does not like, the stock market at least, right? The stock market gets fearful, they get uncertain about that, and that's less stimulus for stocks, less stimulus being pumped into the economy, which helps stocks, and it's a little bit concerning. So we are seeing a reasonably good sized dip on the stock market right now, which again, right now, in my opinion, we're seeing a little bit of wick action down here at support, so maybe we see a bit of a bounce here, but overall it is still looking very shaky and have not shown any signs of full-on reversal as of yet. We'll see if we can get a big strong green candle that can actually hold some gains maybe into next week. If you're looking at US 30, SPX 500, they're all kind of the same. They're just selling with seemingly no end in sight. However, again, looking at US 30 as well, we are sitting right there at a pretty strong level of support. And where's that 100 MA? We are below the 100. Let's check, you guys. Let's see what's going on with the 200. Are we below the 200 simple moving average? I'm gonna plug this in just so we can get a look at it. We are indeed. The 200 on the 1-day chart there for US 30 has been broken. And yeah, I mean, short term, it's looking a little fuzzy for the stock market. target. However, again, we still have a demand zone that is being held for the time being here on US 30. So if we can start to see some recovery, if we can see some breakouts, maybe intraday, there could be some great setups for this if we see something. But for the most part, the Fed stance seems very strong, and again, very strong for the US dollar here in today's market. So for now, continuing to stay bullish on my US dollar position. I actually, just an update for you guys, I just closed out my USD JPY long for a profit there. Great trade. If I pull up the 1 hour chart, you can see I shared this inside of the private Discord channel. I ended up going long back here and closing out right here just after we got this big rejection candle. I decided, you know what, I'm just gonna go ahead and cover my position before the weekend, and hey, maybe I have the opportunity to re-enter next week. By the way, you guys, today is our last day of the 22% off sale. If you're not already in the private Discord and you would like to join the Discord, this is gonna be your best chance for a little while to get in for a discounted rate. Again, 22% off using the code down below in the description. And what you get is you get access to every trade that I am taking with the full breakdown and analysis. You get a notification on your Discord app that, you know, so-and-so took a trade, whether it's me or one of the other analysts within the group. You can jump in on the coaching calls, join the chat rooms, etc. So don't miss the 22% off sale. If you've been meaning to join, today is your last day to do so. So get it quick, come join us. We'd love to have you inside of the group and help you grow as a trader, as well as meet you. We're trying to meet more people who are down to earth and realistic traders. If you made it to the end of the video, that's probably you. So thank you very much for being here and have a great rest of your day. We'll see you next time. What's up, guys? Thanks for watching today's video. There are more videos available on our channel here and here, so go ahead and click into that for some more free trading content. With that said, thanks for watching. We'll see you back next time.